Our next presenting company is Proto Resources. Andrew Mortimer is the chairman and founder of Proto Resources as well as joint managing director. With a background in law and metallurgy as well as experience in investment markets, Mr. Mortimer has experience in creating, structuring, and preserving the necessary strategic alliances to build solid mining businesses with the potential for sustained growth. Andrew?
Tremendous. Thanks. Whereabouts? Yeah. Tremendous. Thanks a lot for that, Laurie. And thank you, Laurie and Tom, for setting up this marvelous conference. It's great to be here in New York. Essentially, Proto is an Australian-listed nickel company. We've been listed for about 4 years now. And we're essentially looking to attack the global nickel market, which is approximately $40 billion US per annum, with a mixture of technology that I'll talk to you in depth about in a bit, our flagship project Barnes Hill in Tasmania, and then we also have some exploration which I won't talk about in this presentation, but if anyone has any questions, please come and talk to me about that, for sulfide, nickel, copper and platinum group elements that we're working on as well. Now, nickel. We're the only nickel company for today, but nickel is an extremely important metal. 2/3 of the world's nickel goes into stainless steel production. It's a great metal for alloying. It's very hard, it's very strong, it's very non-corrosive, it's very heat resistant. So it finds a lot of applications where obviously you have to not just have a strong metal, but one that is resistant to heat and corrosion. So it's got substantial application, but basically only in alloys. So you find it alloyed in batteries, coins, even jet engines, obviously normal car engines, and stainless steel, as I said before. So an incredibly useful metal, and we believe a metal of the future that will give you the ability to build more and more sophisticated and I suppose strong tools of trade that can withstand high pressures, high temperatures, so on and so forth. So a great metal, about 1.4 million tons of it gets produced every year. The current price is about $27,000 a ton. Just to say a few words on our cap structure, we're currently capped at about 24 to 25 million Australian dollars. As I say, listed on the Australian Stock Exchange. I believe that we would obtain quite a different valuation if we were listed in Toronto. We're not. And obviously that's part of what the company is looking to do moving forward, to get obviously a better appreciation of the assets of the company, currently trading around 6 cents. Now, let's go to our flagship project, the Barnes Hill project in Tasmania. We have a flyover of it. And this project we're looking to put into production over the next 2 years. And we expect it to be finally producing late next year or early 2013. And I think it's fair to say that this is probably the best situated mining project anywhere in the world. I haven't seen a better situated project in terms of logistics. We're 10 kilometres from a deep water port. We're about 15 kilometres from the Bell Bay power station. We're 200 metres from a sealed road in a historic mining district. So we're simply mining amongst other old mines. And we're about 4 kilometres from the nearest mining town, which is Beaconsfield, which of course has the Beaconsfield gold mine. So I suppose you could say they're also equally well situated. So obviously that logistical advantage gives us a massive advantage for bringing the project into production. Even during the depths of late 2008, internationally the project was recognized as one of the few projects where there was still a healthy profit margin to be made, and we kept on going with our development strategy at that time. Essentially, we've been working on this project for over 3.5 years now. We're right at the end of the process in terms of mining license and development proposal, and we should have our mining license granted in the next 4 to 6 weeks, and lodgement of our development proposal during that time as well. Obviously, mining license is very important, but it is only 50 to 100 pages long. Our development proposal is on about 8 or 9 compact discs. It's a much larger document. Obviously, they were looking for it in soft copy, not hard copy. So essentially, we've spent a lot of time working on this project in terms of the permitting and approvals, and I'm presenting it to you today very much at the end of that process. We've gone through that 3 years. Now, the project itself is about 12 million tons at just over 1% nickel and cobalt combined. But some of you will know that nickel laterite is actually not just nickel in the laterite. It's cobalt, iron, and magnesium. I'm going to talk about the technology in a moment. But essentially, our approach is not just to produce the nickel and the cobalt. It is to take out the iron and the magnesium as well and sell that. Because a simple rule of business is that you try to increase your saleable product and cut your costs. And that's essentially what we're doing. We're increasing the number of products that we're selling with the cobalt, the iron, and the magnesium. We're left with less to store in the tailings dam, a lot less, and we can recycle our acid, which is our big input cost. So that makes a very big difference to the project. Now, obviously, nickel, great metal, 25,000 US a ton and going higher, but the resources boom means that it's worth recovering the iron and the magnesium as well, and that's absolutely key, because you can either recover them and sell them, admittedly not for a huge amount, or you can pay to store them in a tailings dam, which no one will like you for. The shareholders, the neighbours, especially the neighbours. So essentially, our approach is to, as far as we can, produce iron and magnesium and cobalt, as well as the nickel in nickel laterite. And as I'll say more on that in a moment, I think that is the key to nickel and other minerals as well, which I'll say a bit more on. The Barnes Hill project has a mineable reserve that's been calculated for us by Snowden's of just over 4 million tons. Obviously, we're looking to increase that, but that is the mineable reserve so far that Snowden's have signed off on as being economically viable. We published that late last year along with our independent resource, and also there is research coverage on our website, protoresources.com.au, from RB Milestone here in New York, who have a target share price on us as well of 36 cents. Now, essentially, that valuation, I suppose, can, well, in that case, the report based it on the Barnes Hill project, which is our development project. But obviously, we're very keen on our technology as well. Now, some of you would know that half the world's nickel comes from nickel sulfide ore bodies, which occur at depth. Now, they are the orthodox source of nickel, but they are deep down, they're hard to find, and they're running out. They only make 25% of the world's nickel reserves. So if you want to be involved in nickel, you have to take nickel laterite seriously. Nickel laterite is currently producing half the world's nickel production, and we think it's very beneficial because it occurs on the surface, so you're simply left with the processing to deal with rather than underground mining issues. And of course in the Beaconsfield area there's been issues with that, so we're very keen to be looking at a surface operation only in that area. Now, the other forms of nickel laterite processing have been high-pressure acid leach. There are a few successful examples around the world, but they have very substantial capex running into the several billions. Our capex, we believe, will only be about 45 million and is 1/10 the cost of, say, an HPAL, high-pressure acid leach process. The high pressure, high temperature stops the iron from being eaten away by the sulfuric acid, okay, and you're left with a nickel and magnesium stream that you then deal with to get your nickel out, and the magnesium sulfate goes to the tailings dam. But there's a lot of history behind that I won't go into, and essentially there's been certainly a lot of problems in Australia using HPAL. Now, the other form, which we are a hybrid of, is heap leach, so it's low pressure, low temperature, where you don't have the high capex of the HPAL process. But essentially what you then have is your recovered nickel, but then you have to truck in limestone to neutralize your iron sulfate and magnesium sulfate, which is left over from the process. And obviously in the process you're not selling any iron and magnesium, you're storing it in the tailings dam, and you're storing the sulfate iron as well. And that's problematic because you're going to have to replace all of your acid at a significant cost. Now those costs unfortunately lead to companies looking at bigger and bigger projects, and they actually go as far as taking drastic steps of even building their own acid plants, which we're not great fans of at all. I consult on other nickel laterite projects, and it really is a problem when the person you're talking to starts getting more excited in the conversation as they say their project can get bigger, and then it makes sense to buy a $250 million acid plant, so on and so forth, and essentially you end up with a very large, highly engineered project that costs you several $1 billion up front, with the hope that acid prices don't, that sulfur prices don't go against you, and that you can make enough money out of the nickel on its own. Essentially, the nickel price can be volatile, and that's why we're keen to strip out the iron and the magnesium as well, so that you have other commodities as well. That's a key part of the process. So obviously we are avoiding the notion of neutralizing iron sulfate and magnesium sulfate coming out of nickel laterite ore, and then putting in a tailings dam. That's very expensive, and I suspect bit by bit environment departments will actually start winding that back and start insisting on what we're doing with our technology, which is nanofiltration. They won't just let you put as much iron or magnesium as you like into a tailings dam just because you've built it yourself and paid for it yourself. In the past, people who could released it into the ocean. That obviously was stopped. Now tailings dams are used, but obviously that still is very expensive. And as I say, I suspect from what we're hearing that environment departments simply won't allow it in the future. Now, moving on to our technology. Essentially, what we do is we take the nickel laterite ore that's then run through with sulfuric acid, and you end up with a mixed metal sulfate solution. All right, you end up with nickel, cobalt, iron, and magnesium sulfate, and then the trick is to split them up. Now, the first couple of bits of our process are actually already in use by Rio Tinto at Palabora in South Africa. Okay, it's a resin technology that Dow's created, and essentially you load the nickel sulfate onto that resin, and then you take that off to the electro-winning plant, and you produce your nickel metal product from there. So that has been operated for 3 years by Rio Tinto very successfully, and they recently bought that plant outright from our joint venture partner, Metals Finance Corporation, for an undisclosed sum. So that that front-end part of the technology where you get your main cash flow from the nickel is already in the field with the Dow resin. Now, the second half of the technology, which is actually in a company called Barrier Bay, which Proto Resources owns 50% of, that technology is where you take the iron sulfate and the magnesium sulfate, which is the vast majority of what comes out of the vat leach or heap leach system, where you take that and then you split it up into a iron hydroxide and a magnesium hydroxide. We've got some pictures of that. Essentially, you end up with regenerated sulfuric acid one side of the membrane, and the other side you have the iron and magnesium product. Now, the magnesium product is quite pure because it's the last metal to be left in the circuit. The iron product is reasonably pure, however, it's also magnetic. So that, of course, makes it amenable to magnetic separation. So what is good about that part of the process is obviously you get your acid back and you get a magnetic iron product which you can refine further. And that's extremely useful considering that you want the acid but you want to sell some of the iron as well for whatever price you get, but just so long as it doesn't end up on the cost side of your ledger. Now that technology is currently being piloted right at this moment. We kicked off the commercial pilot of it this week in northern New South Wales, and we're using a 10-ton sample. We have used this technology before now, testing it on smaller samples, 200 and 300 kilograms, and it's worked extremely well. And at the moment, the 10-ton sample's going through, and we'll have news on that over the next 2 to 6 weeks. However, we don't believe, although 10 tons is a good number, obviously you want to do it with larger amounts, we don't believe that there'll be a scale-up issue with this kind of technology because essentially you're not dealing with any kind of higher pressure or temperature. That means that as you get bigger, you have to do different things. It's modular. Essentially, as you get bigger, you have more modules, you have more pumps, you use more electricity, but it doesn't change any of the chemistry. It doesn't change any of the core parts of it, so that you have to change as you get bigger. In other processes, as you get bigger, as I said before, you have to add on other things. So if you're using more acid, maybe build your own acid plant, which, as I say, has a very high cost on its own. We don't have those sorts of scale-up issues. It's essentially like an electro-winning circuit, okay, which is very straightforward. It's simply an anode and a cathode, and we believe that the only issue that we may run into is one of harvesting with the magnesium sulfate. But considering magnesium sulfate's the only thing left in solution, that shouldn't be too much of a problem, and it appears to be competent enough from the tests that we're doing. So scale-up isn't too much of an issue. Essentially, we've been working on this technology for about 3 years now. It's patented. Those patents were published in July last year in 160 countries. So we've got strong intellectual property protection for that. And we believe that this technology will end up being the default technology for nickel laterite moving forward. There's no doubt that we have to harvest nickel from nickel laterite because it's 75% of the world's nickel reserves, so 3/4. But how are you going to do it? High pressure acid leach, pyromet, a coal blast furnace in China. There's just too many problems with all of those. We believe it has to be low pressure, low temperature. Now, what has become very evident from our work is that this technology can be applied not just to nickel laterite ore bodies, but to other ore bodies as well. Iron is a ubiquitous element. It occurs with copper, with zinc, rare earths, uranium, so on and so forth. It ends up with a lot of other minerals, essentially as a contaminant, even though iron itself is quite valuable. So inside the technology company, and inside Proto, we are now looking at these other projects, especially in copper, that can be influenced by our technology. One good example is Olympic Dam. I didn't realize, but they use sulfuric acid in their uranium circuit. They end up with a lot of iron sulfate, a lot of Fe3SO4, and the way they deal with that to get it from Fe3SO4 down to Fe2 is they actually add in another reagent, sodium chlorate, to oxidize it. So for them, obviously, they have to buy that sodium chlorate. They don't produce it on site. Okay, they have to buy that in, transport it in, store it, mix it, and then they have to store the contents in a tailings dam. Now, our way of dealing with that is simply to use electricity with our patented technology and the Dow resins and membranes to simply give the Fe3 a slight kick, electrical kick, and knock it back to Fe2SO4. At that point, you get some of your water back, some of your sulfuric acid back, and you just end up with more Fe2SO4 molecules. And then from there, you can go back to the other process where we split the iron sulfate, the Fe2SO4, into iron hydroxide, the magnetic, slightly metallic product that we produce, and the acid. So look, there's substantial application for this technology elsewhere. The other thing I think that makes the technology so interesting is that sulfuric acid is a very prevalent reagent. Obviously, you produce it from sulfide ores. When you burn sulfide ores, you end up with sulfur dioxide, which you aerate with water into an acid. Okay, and so you have to sell that or store it or do something with it. And there's an international market where you sell it to people like us who have to use it in their process. Okay, so it's a very prevalent reagent, more so than the other acids. And the fact that our technology works so well on sulfuric, although we believe it'll work on other acids as well, really puts us in a strong position, because iron and sulfuric acid are two issues that a lot of mines have to deal with. So essentially, where we're at with Proto is that we believe we have the ability to become globally significant in the nickel market with our technology and with our first project at Barnes Hill, which is so favorably located and so amenable to development. However, we are interested in other elements as well. We believe our technology can expose us to those other materials, and also with our view on nickel laterite, we're hoping to end up with not just a attractive commercial nickel product, but also the cobalt, the iron, and the magnesium as well. Obviously, polymetallic risk mitigation is quite an important thing. You don't want to be just tied to one metal price, and that's why we're pursuing that course of action, very much a business principle in terms of reducing our risk through exposure to other commodities, and also cutting our costs as well as producing that extra saleable product. Now, as I said, I haven't said too much about our exploration. We are in the Northern Territory and WA. I won't say much more on that. If you'd like to come up and talk to me about that, I'm quite happy to talk chapter and verse on that. But essentially, the Barnes Hill project is our flagship development project, and the technology is firming as we go through these last stages of the testing that we believe will give us good exposure to other areas of earnings in the mining industry. Now, over the next 2 to 6 weeks, the milestones to look out for is getting the mining license on the Barnes Hill project in Tasmania. The lodgement of the development proposal, we're currently showing that informally to all the government departments in Tasmania. In Tasmania, you have a duty to, there's a formal, informal process where you formally go along and informally show them the documents before you then take them to them formally. And that does actually help, because it means that you know that they've covered off all their issues before you actually submit it formally and it goes public. So we're looking to do that in the next 2 to 6 weeks. We should also have a significant update on the technology over the next 2 to 6 weeks, explaining how our commercial pilot has gone. I received an email a couple of days ago to say that that had just been commissioned. So we look forward to updating the market on that as well. Finally, we're working on the financing of Barnes Hill. As I said, it is $45 million, a mixture of debt and equity on that, 2/3, 1/3. We have a joint venture partner on Barnes Hill, Metals Finance Corporation, a listed company in Australia that we actually own 10% of. And they have to provide the finance and the technology for the project. Obviously, we're assisting them with that to a considerable degree. But they've been a great sort of assistance over the journey of the last 2 to 3 years with getting the project to the point where it is now. Look, thank you very much for your time. I think that wraps it all up, and I commend the company to you, which, as a company about to get its mining license and the other milestones, is probably one of very few in the world to be capped at our current levels. Thank you very much.
We have time for a question or two. Does anyone have a question?
May I ask, at your current grade in your reserves versus the cost of your process, have you a fairly good profit margin? Do you predict a pretty good profit margin at those grades?
Yeah, look, essentially where we're at is we believe that we can produce nickel for slightly under $2 a pound US. Under the old technology, we're actually economic using our old version of the flow sheet at slightly over $4 a pound. The current price is about, I think, $12.50 a pound nickel. You start to look at $5, $6 a pound as you go into some of the other technologies that I was talking about. Obviously, what we want to do is hit $2 a pound and stay under it, if possible. So we are even working hard with the old technology. You'd end up at probably $4 a pound. This has us at $2 a pound, so it's half the price. And in terms of OPEX, and then of course CAPEX, you don't have such a large tailings dam, you don't have the acid storage, so on and so forth, that leads to higher CAPEX and not so happy neighbours.
Another question?
I see you refer to PGE mineralizations on the last page. Is that Platinum Group? And if so, could you please address that?
Sure, absolutely. Look, essentially what we're trying to do, as with nickel laterite, we're turning it into a polymetallic, so cobalt, iron, magnesium. With our exploration, we're in the Northern Territory and WA, looking for nickel mineralization, which includes copper and platinum group elements. Now, some of these are known as Norilsk styles. The Norilsk Talnak is a group of mines in Russia, which is produce about 100,000 tons of nickel per annum. It's the largest nickel/palladium/ so many of those platinum group element mines. Very, very profitable. And the only other sort of recognized geological analog for it is actually in the Northern Territory in Australia. And it's called the Kalkarinji Continental Flood Basalt Complex, which is continually crustally contaminated with all the things that you look for in a Norilsk-style mineralization. So we've been working away at that. The British Open University's joined us, and they're working away on that, which is great because they're very clever and they're not too expensive. The Queensland University of Technology is helping us. And we will be drilling later on this year, and that does have the potential to be a very substantial value driver for us. we like nickel laterite. We're very passionate about it, probably the most passionate group in the market, but we are not blind to the fact that we have to be in nickel sulfide as well. When you heat up nickel sulfide, it's exothermic, you get an energy credit, and it's straightforward, and the market better likes it. However, we are exploring for that in the Northern Territory, and in WA, we're also exploring for a similar sort of nickel-copper PG mineralisation, but that's actually a bit more developed. It's in a area that where that mineralisation has been commercially mined before, 40 years ago, and it's got very high levels of copper, nickel, platinum, palladium, gold, and silver on the surface. In Gossans, over 20% copper, 2% nickel, 3 ounces silver, and a gram or so of the precious metals. It's not our focus, but it is very important to us, and it's certainly not on the back burner, because those projects have the ability to add a great deal of value to the company. So we're very mindful of them, but obviously Barnes Hill and the technology is very much at the forefront, and with the opportunity to work on projects like Olympic Dam, for example, that obviously would be quite exciting for us. And at our technology, I should say, we're already working on a 10-ton sample from another very large nickel laterite company, trying to assist them with their magnesium sulfate issues. So that obviously is our focus.
Thank you very much, Andrew. We're going to take a break and come back.